Hi, this is Zach Meir with the Bulletin Board Heroes here at Zach's Traders Cafe for Friday, the 1st of December. Starting off the month on a positive note with the Footsie breaking through that 50-day moving average, the blue line there, 74.75. Looking for a break of November resistance, 75.33, to take us up to 76.50 by the end of this month, which is the top of that falling trend channel from February. In the unlikely event that we fall back below 7400, then the uptrend line from March, the red line there at 73.10, would be the target. But with the RSI at 55 in the mid-50s, we are looking for a relatively quick move towards 76.50. Onto the DAX, which is in rather better state than the FTSE at the moment, breaking in towards the highs of the year through 16,500. We're looking for that while we're above 16,100, which is basically recent resistance and post-August resistance as well. And the big target here, maybe as soon as the end of this month, 16,800 at the top of that broadening May triangle. 50 and 200-day lines both rising, which suggests that we'll have a golden cross sometime later this month, and the run-up to a golden cross tends to be the strongest part of the cycle. Moving along to the Dow, which has a 50 and 200-day moving average sort of slide higher, which and also we've also got this very near to the top of that rising trend channel from this time last year, 36,100, which seemed rather ambitious as a target even as recently as the beginning of the week, but now looks rather relatively easy. In terms of what could happen next, above 36,100, looking for the line I'm just drawing at the moment, so 36,600 maybe by the end of this month. But obviously we've come up a long way in a short time frame. Upside value while we're above the old August resistance, 35,600. Moving along to Bitcoin, and here I didn't get my 43,000 by the end of last month, but not too far away either. I've got a resistance line projection from this time last year. That's heading towards the 42,000 area, and above 38,000 on an end-of-day close basis. We're looking for the low 40,000s by the end of this month, or even sooner. On to a couple of markets which are quite compelling at the moment. The first one is gold, which is well above the $2,000 an ounce level, the psychological peg against the dollar, which has been in place for many years. The 50 and 200-day moving averages both rising towards a golden cross, hopefully in the next week. Above the 2060 area, which was our old target, we're looking for as much as 2180, maybe by the end of next month. And the way things are going, that could actually happen by the end of this month, given that there is a big logjam to be cleared from current levels and upwards. On to the Great British Pound, which is interesting in the sense that we had a target here at 127.30, and yesterday the high at 127.34, so that worked nicely. Current view is at above 126, which was yesterday's support zone, looking for 128, maybe over the next week or so. Another market where the 50 and 200-day lines going into a golden cross, so hopefully we'll be back above 130 early in the new year. Moving along to the stocks, and starting off with Angle, which has featured here of late. We had a little rally there back in September, but now it looks as though we might have a more serious rally for December, breaking that falling wedge in place since December around 10.5 pence above that initial target here, 16 pence maybe by the end of this month. Big picture target by the end of next month, up to 22 pence. Obviously it's a punchy call, but it looks as though we've got the bullish divergence backing this in the RSI window to get the shares towards their target. Next contender is Armadale Capital, and here you can see that there's been a nice little bounce off a rising 50-day moving average. I call that sideways shuffle. In fact, it's what I also call a V-shaped bull flag. So looking to break November resistance early in December and head back up to fill the gap on the daily chart from June, around the 1.3 pence level, hopefully over the next few weeks. But that rising 50-day line and the bear trap below 0.7 should be enough to take Armadale up in a sustained way. Also up in a sustained way at the moment is Chaarat, which has had MOU news today, and the shares have already been anticipating something positive. We broke out at a falling wedge around 3.5 pence late in October, gapped through the 50-day line and have gapped up again. The view is that we're heading towards the resistance on the way down back in the summer around 9.6 pence by the end of this month, while we remain above the recent support at 6 pence. Capex is next, and here we had a few flurries for the shares during November. Hopefully we'll have a more sustained move for December. 50-day line at 1.2 pence. Above that, we're looking for not only a retest of last month's resistance of 1.9 pence, but up to as high as 2.7 pence by the end of next month. But the key here is remaining above that 1.25 pence zone. On to the stock where angels fear to tread, Canadian overseas. Thousands of false dawns here. Maybe this is another one of them, but at least we do have a signal in terms of breaking a falling wedge in place since October around the 1.8 pence level. Above that, we're looking for a retest of October resistance around the 2.9 pence area, hopefully as soon as the end of this month. But the key here is remaining above 1.8 pence. If we fall below that, then the idea of a rebound is not valid anymore. Speaking of rebounds, one of the best rebounds of the recent past has been Good Energy, and we had an initial target here around 260. Next target was around 320, and now we've got an extra target, which seems equally unlikely, up to as high as £5 by the end of next month, while the shares hold above the, call it the £3.50 area really, because that would be a reasonable stop loss, but if we're lucky, they'll stay above 375 and the old November peak. So let's see if Good Energy lives up to its recent strength. Moving on to one of the biggest rises yesterday, GCM Resources. It's come back a bit now, but as long as we're above the initial target here around 1.5 pence, we could still have a new leg up towards 2.5 pence later this month. But as I said, the key here is remaining above 1.5. Otherwise, it's a flash in the pan, a bit like the moves we had back in June and in January. Kelso is next, and here it's good to see the shares nearly hitting the target there at a broadening triangle base from May. That was around the 3.4 pence level, so not far away. So far, above 3.4, we're looking for 5 pence by the end of next month, and ideally we stay above the 200-day moving average at 2.8 pence in the meantime. On to Lifesafe, which had a bit of a slap yesterday. It was a bit of an over-exaggeration on the downside and on the negativity, but what's interesting here is that the shares are above the floor of the gap there, around 18.5 pence. The longer they stay above that, the greater the chance of at least a move back to old October support there, around 25 pence later this month, and that's something that could happen even if the shares then fall back again after that. On to the last two. First one is Oriole, and here nice V-shaped bull flag above a rising 200-day moving average, 0.14. Above that, looking for 0.24 by the end of this month, or even sooner, given the fact that we've had two unfilled gaps to the upside. Finishing off with Quadrise, and here we hit one of our targets. Well, we hit a couple of our targets. The first one was around 1.5 pence. Second one around 2 pence, the red line, and then there's a third one now, as high as 2.3 pence, which the shares would mean the shares are retesting June resistance. Let's see if we can stay above 2 to give us 2.3 on Quadrise. That's it for me today. More updates over the week.